Welcome to another episode of the Kinvestor Report, where I chat with industry experts to discuss the market, commodity, stocks, and the economy. I'm your host, Arlen Hansen. This interview is not investment advice. I'm not an investment advisor or professional geologist. However, I've been investing and kicking rocks for over 24 years. If Ken or myself has any financial interest in any company mentioned in today's interview, it will certainly be disclosed very clearly. Please do your own due diligence. Today, I'm joined by Josef Schachter of the Schachter Energy Report. 40-plus year veteran of the Canadian investment management industry, Josef is a sought-after speaker, presenter, strategic advisor with a primary focus on the stock market and the energy sector. Josef, thank you so much for joining me today. How you doing?
Oh, it's great. I'm glad to be with you, Arlen.
Yeah, awesome. Lots to talk about. Lots to talk about. Read your latest Ion Energy report here, and so I got a bunch of questions here. You're very vocal about Trump's new aggressive foreign policy stance, especially tariffs on Russia, buying and military posturing. What are the real risks to energy stability if tensions continue to escalate further with Russia or NATO getting directly involved?
Well, the basic issue is going to be how much of a confrontation are they ready to do with Russia? And they have to also remember that China's in the background. China still wants Taiwan. So they know that they can't push Russia too far because China is supporting them and is the biggest buyer of their oil. So Trump is now doing this India thing where he says, okay, I had 25% tariffs on you. I'm going to add another 25% because you're buying Russian oil. So 50% tariffs, and they provide clothing, pharmaceuticals, and other stuff, hero motorcycles and all that kind of stuff that goes into the U.S. And they also say there's a bit of hypocrisy by the U.S. because they're still buying uranium hydrochloride, they're buying platinum, they're buying palladium, they're buying fertilizers, they're buying chemicals. And not going back too many years, they were buying oil for the East Coast of the United States. So the Americans sing a song of, that they're really trying to sanction Russia tough. The reality is they're not. And there's always exemptions, as you found out with Apple. Apple's producing a lot of iPhones in India. Here we're going to spend another $100 billion building product in the United States, and you now get an exemption from India so you can bring your phones in, because if you built the phone in the States, it would be 3 times the cost. So there's a lot of hypocrisy here. I'm concerned at some point that we're going to see China start taking these small islands that are part of Taiwan that are very close to the Chinese coast, and then if they feel they can get away with even more, they could as much as blockade the island of Taiwan. And then they could say, look, we need to start talking about you guys coming back, just like Hong Kong did and Macau did. And the Americans really do not have anything close enough on military side to break a blockade. So I think that a war front there would not be in China's best interest, killing their own citizens. But they could say, we're going to put in a blockade. It's going to hurt you economically. It's going to hurt countries that are buying product from Taiwan, i.e. NVIDIA and AMD, that are buying a lot of chips that are manufactured there. While Taiwan Semiconductor is planning to build a lot of plants in the States, those are years and years away. So there's a lot of geopolitical tensions out there that can affect the price of oil. So you'd think that that would mean higher oil prices. The problem we have now is you saw the weak jobs data in the United States and the revisions. You see weak job numbers in China. And so the two biggest consumers of energy, one of them, number one is the United States, and they're producing 13.3 million barrels of crude oil, but 9.8 million barrels of natural gas liquids and renewables. So we're looking at 23 million barrels of production, only 20.1 million of demand. So the United States is self-sufficient, which is the first thing. And they also export last week 3.3 million barrels. So what they're doing is they're buying Canadian crude, which is our heavy crude, which goes into the refineries in the Midwest and the Gulf Coast. And then the U.S. from the south sells the light oil from the Permian and the Eagle Ford, which the refineries can't use, to foreign buyers. And so a couple of weeks ago, those numbers were coming down. And then, as part of these deals, Trump has got them to say, okay, you're going to buy more energy, you're going to buy more military goods, you're going to build factories in the States, you're going to invest in the States. So we're beginning to see those numbers go up as more exports pick up. And the United States, one thing to note is U.S. production, because of these low prices. If you remember, we were just around $70 about a week and a half ago. We're now $64 at WTI. The U.S. production of crude oil is 13.28 or 25 million barrels. That's down from 13.4 a year ago, down 118,000 barrels. And that's because the price of oil is too low. And companies that were drilling tier 2 and tier 3 inventory are not doing that anymore. Tier 1 inventory is, there's less of it. And so we're beginning to see declines in U.S. production. Drill, baby, drill only works at higher prices. Trump wants low prices and drill, baby, drill. He's not going to get that.
Interesting. With these oil prices under pressure, is the market like properly pricing the geopolitical risk that we've talked about? Like you kind of listed off quite a few that I would be concerned about as an oil investor, energy investor. Is there complacency with all this going on right now, do you think?
I think the market is focused right now on supply and demand. And OPEC, as you know, increased the production and it's really a quotas because many of the countries can't use the quota. And each of the months that they've talked about increasing by 400,000, they haven't. The last one that was supposed to be 411,000 in June, they only increased it by 220,000. And the only ones that could do it were the Saudi Arabia and UAE. Those are the only ones with excess capacity. So you've really got a situation where there's weak demand. There still is new production coming on from Brazil, Guyana, because of the big discoveries there, Exxon and Hess. And you have declines in a lot of other more mature basins, North Sea and other places. The U.S. is now down, as I showed you the data from the EIA just a couple of minutes ago. So we're looking at the supply now ahead of demand. The U.S. Last week had a build of 2.3 million barrels a day for total stocks. And so we're looking at the week before was 7.2 million barrels. So if we see continued build in inventories over the next few weeks, and we see weak economic data out of China, then I think the price of oil could break 60 again. If you remember, we went down from the 70s to $54 in April. I think we break 60, 56 to 59 is the bottom. And probably that'll happen in September, October. Historically, the summer driving season is over after Labor Day, and we go into a weaker demand period where you usually see an inventory build, a million and a half barrels a day. That would spook the market, seeing more, supply build, demand weak. And then, of course, when winter comes, then it's all weather related. If we have a mild winter, then prices could stay low. But demand normally rises between 1.5 and 2.5 million during those winter months. If we have a normal winter, we'll probably be looking at $75, $80 oil during the winter time. And if we have a colder than normal winter, that could be $80 to $90 WTI. And then any geopolitical event that happens above that, Straits of Hormuz, Straits of Malacca, the issues around, as we mentioned about China with Taiwan, all of that could cause the geopolitical premium to go up. If you remember, after Russia invaded Ukraine, we went from $80 oil to $120 oil very, very quickly.
I remember that very well when I was paying $1.49 a liter up in Canada for gas.
Yeah. So any geopolitical risk that gets to be significant, and a China-Taiwan would be there. As you saw, Russia and is going to meet with Putin's going to meet with Trump. Getting him in the same room with Zelensky, I don't think will work. I don't think there's a little bad blood there. But I think that Trump needs to call victory, which I think if the bombing stops, and that's one thing that Putin has thrown out to Witkoff, is maybe we stop bombing civilians, which is stupid. They should be bombing military targets, but they don't. It's like Hitler's mistake of, he was fighting the Brits and going after their military targets. And then he all of a sudden got a bad mood and decided to attack civilian targets. And that changed the ability in the Battle of Britain for the Brits to be able to defeat the Nazi war machine, coming in by V2s and airplanes and bombers, etc. So, look, there's lots of reasons to be bullish on energy longer term, and the basic one is this: the OECD is going to see a decline in demand because of EVs, fuel efficiency, all those things. So we may lose 2 or 3 million barrels in the OECD between now and the end of the decade. Offsetting that, the countries that are going to be producing the lithium, the copper, the nickel, aluminum, all the things we're going to need to build out the grid, to build out the ability to have EVs. The only country with big EV, consumption is really China. 50% of the cars are EVs there.
Is it that high already now? Yeah.
50%. You've
Wow.
got Europe with some countries that are focusing on it that are high, but not a lot of volume. And Tesla is getting a run by BYD, as you're probably reading up on. BYD is pretty awesome. And so Canada, of course, won't let Chinese vehicles in because they have a 100% tariff on them and no dealership distribution capability. So I think that if you have 6 to 8 million barrels of incremental growth in the non-OECD, offset by a loss of 2 to 3 million from the OECD. Right now, we're about 105 million barrels a day, and we are not spending enough money to replace 105 million barrels a day. If we end up at 108, 109 by the end of the decade because of the emerging world, be it Africa, South America, parts of Asia, then we're not going to be producing enough, which means the only way you balance is higher prices to attract capital. And right now, the industry, after throwing a lot of capital at the industry years ago, and only working, they wanted growth. Shareholders rebelled, and shareholders said, "Game over. We do not want you growing for growth's sake. We want you to make money. We want you to pay down your debt, and we want you to pay us, shareholder returns, be it normal course issuer bid or dividends." And that seems to be the mantra that they're keeping. And if they want to grow, they've got to get higher prices.
I think if they want to grow, they're acquiring now. It's just less exploration, less,
Yeah, there's
all right.
merger
Yeah.
mania
Yeah.
because the raw material is land. And so if somebody else has it, so Whitecap went after Varen. You saw, the acquisitions by ARC and Tourmaline from Strathcona. We're going to see more consolidation of the key plays over time, especially as we see more approvals and more building of LNG plants on the West Coast. And there's a problem for small cap companies where they try to, grab a few thousand barrels, grow from there, because there's a lot of difficulties dealing with the environmental group here, the AER, Alberta Energy Regulator. And so we aren't getting the new birth of new juniors, which we need. And historically, those juniors have turned into great investments for people if the managements have done a good job. The big are getting bigger. There's less medium-sized companies, and there's really nothing on on the newbies getting into games and getting into plays and building up their assets. It's a tougher market for juniors now than I've seen in probably 20, 30 years.
And the the capital from early stage investors is not there for those companies as much as they used to be, by any means,
Yeah,
right?
if you've got a team that's really got a reputation, they can raise money. If
Mhm.
you've got a play area, be it as you said, Hungary, which could have some very good natural gas reserves and high prices,
Yeah, it's like
Europe's high
16. It's like,
prices.
is it 16 bucks right now? Around there?
Sorry?
It's around 16 bucks right now. Like,
It's between 15 and 17.
yeah.
And again, it's storage and which countries and which ones have low storage versus high storage. High storage countries would have lower prices because they know they'll be ready for November 1 winter. Those that are under stored relative to what the EU wants them to be, they're going to be more aggressive buying. And then, there's a company like Horizon Petroleum, which is in Poland. And they're a new company that is in the process of raising money, and they're going to be bringing on new reserves in early 2026. And there's a good conventional business, especially at $15 to $17 an MCF. And we're buggering around here in Canada under a buck.
That's crazy.
It's disgusting.
Yeah. I want to go back. You actually answered my questions about the EV, but I'm gonna throw it out there. Is EV actually making a dent in North America right now for energy, like for energy demand? Is it quite there yet?
Well, we all know the problems of Tesla. They used to the liberals left wing loved them, and now they hate them.
Hmm.
And their cars are not as well. I bet you GM is probably getting a lot of traction with their cars, especially the Cadillac versions are doing quite well.
Hmm.
Um, and then you see BMW coming with them and Mercedes. The problem there is tariffs.
Hmm.
The 25% tariffs are a big issue for them. So they're being priced out, which effectively gives you an umbrella for GM that they can increase the prices and
Surprise,
make more money
surprise.
and not lose as much money. They're losing money on every car they sell, but they'll lose less money because of the umbrella. Um, but the big issue is in northern North America, range is a problem and winter is a problem. The battery storage doesn't hold. I'm in Calgary. My family, my daughter, my grandkids live in Edmonton. I couldn't take a car in the middle of winter and drive it up to Edmonton. Can't
Yeah,
do that.
yeah. I don't even think you can get a Tesla in Saskatchewan. Okay.
Yeah.
Minus 45 degrees. No, thank
Yeah,
you very
so
much.
until that is resolved,
Yeah.
taking down and owning one would be a city vehicle.
Yeah.
So if you want an efficient vehicle for in the city, and you can plug in at home and you put a charging system in, that's probably where the market share is going to be. And we'll see which companies and which brands win. But to go long haul, especially in truck country.
Yeah,
We're
yeah,
in
yeah.
truck country here.
Oh yeah,
And
yeah. One
and
straight line from Alberta to Manitoba, all
and
the way through,
and and
right?
until you can prove that the trucks don't have to stop every hour to
Yeah,
to get a recharge,
yeah,
it's
yeah.
questionable if it's going to be a big business in Canada. I've got friends who own Teslas and they're charging them up. They have to go to the high speed chargers, if they're going between Edmonton and Red Deer and then Red Deer to Calgary and lineups for them. I think it's an easier lineup to go to the gas station
Or a Starbucks.
and especially if they have both.
Yeah, perfect, right? Okay, I want to go back to geopolitical risk because we talked about if there's some geopolitical event, we might see some massive spike in energy prices. I want to go back the other way. Are there any geopolitical events that could happen that could crush oil, like some sort of softening, or Russia, Ukraine gets resolved, or China and the US gets resolved? Do you think that hurts oil? Or is there any type of event out there that's sitting there that could be a black swan to the downside?
Well, Russia is probably producing, close to 10 million barrels a day. Instead of selling it to Europe and even to the States in the past, they're selling it to China and India. And China and India are the big buyers. India is growing rapidly in demand. China continues to do it. And I don't see, Russia not producing that. Could Russia increase production by a million or 2 million barrels between now and the end of the decade? And assuming peace breaks out and, there's no tensions there. Um, possibly, but remember, demand is growing by 1 million barrels a day. So if we don't see higher prices, they can't spend more money, building the infrastructure. Remember, you make a discovery, you got to have the infrastructure to move it. So that's expensive. You look at the TMX pipeline, how expensive that was to build, when the federal government took it over, and they're going to have to take a massive write down if they ever want to sell it to the First Nations and to the public. And so any new builds, of any large size are very, very expensive. In terms of reserves, Venezuela's got a lot of reserves, but that needs a change of regime. Canada has very big reserves, but are we going to see any more oil sands developments under the current government? No. Um,
We need to change the regime here too.
yeah, Brazil has salt domes that could be good, but again,
Massive
price
storage.
matters.
Yeah.
In the Middle East, so many of the countries there are taking the revenues that come in and using that for the largesse of the government, keeping the goons in power, and so a lot of it doesn't get spent back in the ground to replace the decline rates. And we're seeing a lot of OPEC members not even able to use their quota, Libya, Iran, others. And so, is there a chance to see, let's just say, let's say with 104 production now, in the fall period, and production might be 105. You get into winter, that could be 106, 107, back off again after that, and demand grows by 1 million barrels. The argument is going to be the bullish argument, not the bearish argument. And low oil prices means companies not spending money. And if we get down to the mid 50s, which is what I'm forecasting for September, October, I don't see us going down below that unless there's a thing where you say we're slamming the economy down and closing the economies down, i.e., COVID. I don't see another COVID instance forcing governments to do the lockdowns like they did then. And so that is the only case you could make where you could say, okay, demand goes from 105 million barrels a day to 70 million barrels a day because we're all driving to our homes, we're all wearing masks, and we're not going on cruise ships, we're not going on airplane travel. That's the only wild card would be another COVID instance, which forces governments to close everything down. And I don't believe the people will accept that after some of the craziness that happened with COVID. So it's a non-starter there. On the opposite side, if there was, Iran attacking any, the Shiite Sunni problem, and that meant that the Straits of Hormuz or, any of the other, Suez Canal or whatever got impacted, that would drive the price of oil up. If we saw the Taiwan situation, that would mean a lot of the oil that comes from the Middle East going to Japan, South Korea, China, India would be impacted, and the cost of insurance for the tankers would go up substantially in a war zone. You could be arguing, all-time highs for the price of oil, and the high price was in July of 2008 at $147 a barrel. The market never paid in the price of the stocks for 147, but they paid for $100. They believed that $100 was a sustainable price at that point. Today, you could argue that the stocks are paying for maybe $65 on oil, but they're paying for $253 for gas. Gas is trading under $1. So AECO is a problem for Canada. US is getting $3 NYMEX. So the Americans have, let's say, equilibrium. So they'll spend money, but it won't bring on new production. It won't grow production. For the US to grow production, they need $80 WTI and $4 NYMEX. And most companies, when they do their quarterly calls now, Q2 2025 calls, are all saying that they need much higher prices to incentivize them to drill longer reach wells, to go after more zones, to go after deeper wells. You're seeing now wells that are being drilled down, 10, 15,000 feet, but then they go horizontal 4 miles.
It's crazy. Hey? The
So,
technology is
so
wild.
trying to frack a 4 mile deep well and get the production from the toe to the heel, all of that is really new technology is coming to bear, but it's not cheap technology.
Yeah, well, they need Paul Clark from Canberra to do that. He's done like 3,000 wells, unconventional wells. Yeah, can we go back to this European natural gas? Like, what's the divergence there? Like, why is it so high over there and under $1 in Canada? Let's talk about that if you can quickly.
Well, Asia is also an importer of natural gas, and they're probably a couple bucks cheaper because if you remember, you've got natural gas in Australia, you've got natural gas in Papua New Guinea, you've got natural gas offshore Thailand. So the distances to move it are shorter than coming from the Gulf Coast of the United States. And so their price is somewhat lower. If it gets higher because they have a real cold winter, then you can see tankers that were going from the Gulf Coast to Europe going and swinging around through Panama Canal or through around South America because they're needed in Asia and they're buying up more. North America at $4 is cheap. But the concern we have, and it's one that the industry is going to have to be careful about, is if we build, right now there's 16 BCF out of 110 that's going for the export market of LNG. That could go to 30 BCF a day by the end of the decade. So that's going to go to high-priced markets around the world. At the same time, in the United States, they have to repair the grid. There's a lot of data centers that everybody wants. So and they're signing long-term contracts with utilities. So they may be getting a $3 or $4 lock-in. All of a sudden, the grid gets to great use, and wind and solar don't work. You're going to need more LNG, more natural gas, and that's going to drive prices up to 7, 8, 9, 10. We've seen $15 in the past. And you and I, as consumers, are not going to be happy seeing our heating bill. And then we're going to be bitching. Why the hell did you allow these guys to contract for their data centers cheaper than what we're paying? And why did you allow all that gas to go to Europe and cost us more money? So I think that there's a trade-off here of what is fair to the domestic market. And I think the most unfair part is the contracts that are being done for data centers. They want to get close to natural gas sources, have the grid there. You saw the Meta deal with Enbridge for a solar facility. So they're hoping that there's not going to be any interruptions. But you're seeing a lot of LNG deals being done close where the or data center deals being done close to the production of the natural gas. So Virginia is becoming a big player there, and they're doing long-term contracts. I think a couple of years from now, the Virginia citizens are going to be up in arms, and as the grid gets tightened and production, is going more to the data centers, which means whatever production they need as retail individual consumers, they're going to be shocked by the price they pay.
Yeah. Okay, so I'm a big uranium nuclear guy. It's where I've been very fortunate and it's bought my houses, etc. Very fortunate. How much is that going to cut into the demand for like these data centers and things like that?
Well, they're talking about these,
Uh, These,
SMR, small
mm,
modular reactors. And again, we're going to need every bit of it, but we need to expand the grid. The grid is old. The ability to move power from state to state or from province
100%
to province is a
infrastructure.
problem. So to do that, a lot of CapEx has to go into that before you can have end users buy more power. And so I think that's one of the things why you're seeing President Trump talk about all these deals where power is going to be part of the deal. And Apple in Trump's office yesterday was talking about having their own power for their new plants, and creating their own power, because the reality is the local power utility won't be able to, well, it's going to want some of that business because they want to grow. But the reality is, Amazon, Meta, Microsoft, anybody trying to get in the AI world is going to have to find a way to generate their own power, and also the cooling, the air conditioning systems that are going to need they're going to need to keep the machinery cold. And again, there's everybody talks and says how AI is going to change our lives for the better and all the rest of it. There's going to be people who lose their jobs in white collar. Blue collar jobs there'll be more of them. We're going to need more plumbers and electricians and welders and
Miners.
stuff like
Yeah,
that.
yeah,
So
absolutely.
there's going to be a lot of new jobs that are going to be there, and they're six-figure income jobs. So you don't need to go and get yourself a bachelor, master's in history and find out there's no job.
Hmm.
You can go to Nate and Sate in Alberta, and get yourself, a blue collar job that's going to pay you a fortune
And
and give you a very good quality of life.
a very good quality of life and a much cheaper quality of life too, where you are,
Yeah.
right? So yeah, yeah. Oh man, so this has been great. I'm gonna just probably finish off this one last question here. Your buy list has a very broad range from pipelines to junior oils. What areas of the market are showing the best risk reward as we head into this fall, or when you find that time to start loading up the boat again?
Yeah, we have clients of all types. So we have conservative clients who want pipeline infrastructure. They want 5 to 7% dividend yields, growing dividends, and get 10% capital gain. On the other side, you got companies, investors who want to, see, some dividend, like a Tourmaline, but also potentially, a double or triple over the next 5 years. And then we got other people who want to swing for the fence and have a sexy story, like Valora. Valora was a $2 stock, and now it's an $8, $9 stock, because of what they're doing in Thailand. So we try to hit as many areas that our clients would like, and because of our clients being older, with mature portfolios, we cover so they may have, they may want Enbridge and TC Energy, and they may want to own Topaz and Freehold for their income portion of their portfolio. Then they'll have some growth because they want to take advantage of the Montney Duvernay, and that area. And then we have the smaller companies that are maybe growing more rapidly, both domestic and international, and also have access. You should consider having access to some of the service stocks, because if we do see a takeoff with more LNG plants on the West Coast, and maybe an oil pipeline to the West Coast, we're going to need to see a lot more drilling. So you may want to look at the drillers, the frackers, and others. So my view would be is, uh, the product that's going to get the most interest in the near term, given the challenges of government that we have, is going to be natural gas, because we know LNG Canada is going to get to 2 BCF in a year. We know they're going to probably, from every announcement you hear from the owners, that they're going to do the second train. We know that Enbridge, which is, wants to do wood fiber, is going to do it. We know Pembina with the one, that they want to do is going to happen. So we're going to have 6 to 8 BCF on a base of 18. That's a hell of a growth rate between now and the end of the decade. So anybody related to that, you want some exposure. So you can go conservative with big names like ARC and Tourmaline, with the dividend and with some growth, or you can go to some of those smaller names that are growing faster. You can be in a Coetino, you can be in a Birchcliff, you can be in some other names in that area, and then have some of the smaller names, Bonterra in play, which are growing quite nicely, and then look at Step Trican for the frackers and coil tubing guys. Total Energy is another one that's cheap, which is in compression and drilling and service rigs. So there's so many places to be. That's why we have 37 companies that we cover, and we're now in the process of going through the Q2 results of every company. The report that comes out a week from now will have 7 companies in it, and then the next 2 issues will have the rest of the companies, the rest of the 30. So if people want to see, and what the key thing with us is we're independent. So I have something called balance of evidence. So if I see something that I don't like, I will put it in there as a negative. And I also do something that a lot of analysts don't do. I use a 4-letter word called sell. And most analysts don't do
Sin,
that
sinner.
because their eye bankers already will
They're
shoot them.
getting paid. They're getting paid. Let's all be honest. We know they're
Yeah.
getting paid.
So
Uh,
I have an independent streak, and so I'll call it as I see it. I've cut off research from companies for a number of reasons. One, lack of access. If all of a sudden they don't want to talk. 2, insider trading gets spread out, and they keep on saying everything's wonderful, but they keep on blowing their own paper out.
yeah, dishonesty.
That's a winner, the winner to me in terms of get the hell away.
Yeah.
And so I watch what's going on, and our research product I think is really good. People can go to www.schachterenergyreport.ca, and then they can see what's going on there. The conference, they can go to www.catchtheenergy.ca. And then for the Substack, it's Josef or Schachter Energy, Ion Energy, Schachter Ion Energy. So there's lots of ways to get our product. Right now for Substack, you can do that for free until mid-September. So people want to see what we do. That's a great way to do it. We have quarterly and annual subscriptions, so people can say, "Let me try it for 3 months. If it works, I'll become an annual subscriber." So it's a growing business. We got a nice team of 6 people on the team. I'd like to grow that, and to grow it, of course, money in first, as we talked at the
Yeah,
start.
yeah.
And
Where do I send my resume, Joseph? I want to work for you.
it's a lot of fun. We really have a lot of fun. The conference is
Ah,
great, and it's if you're enjoying what you're doing, it doesn't feel like work.
yeah, if I don't enjoy what I'm doing, I'm not waking up. Like, let's forget it. So super simple last question, a little bit off the mark here. But you talked about your clients being older. And I've complained and banged the table over the last 15 years that we're doing nothing to attract the younger investor, especially like mining, right? They're going tech and AI and da da da. Are we seeing the same problem in the energy sector? Like, do you have a hard time educating like the younger generation?
Well, a lot of the people who are older bring their kids to my conference because one, if they own the stocks, they want their kids to know what's in the portfolio. If
And
from the point of view of wealth transfer from
yeah,
generation to generation.
yeah.
The other
Okay.
thing is we're doing outreach to MRU and U of C, to the business faculty and to the engineering faculty, to get them to bring faculty members and people from the programs there to come there to see what it's all about. If they want a career in the industry, no better place than to come to knock on, see managements of companies, listen to their presentations, see which ones are interesting to them, and then talk to them at the booth and just say, look, do you guys do internships, or when do you do the hiring? Who should I talk to at your shop? I'm really interested. I'm graduating with a Bachelor of Engineering in geology or something, and or geophysics or whatever. They're always looking for new blood, and so we're trying to get that outreach to the younger generation. A lot of family offices also have the owners, older, the 50, 60, 70-year olds bringing their children, even sometimes grandchildren, to the conference. And it's kind of nice to see that where there's multi-generations coming. And we also try to promote that. But for the most part, if you look at the video from the TMX of the last year's conference, I think you'd say the average age in the room was 60. And and again, it's people who built up the successful businesses and have money. Let's say with the big money managers, there's or the brokers, but then they have money that they manage themselves, be it TFSAs or direct investments with discount brokers, and they want to know the companies. They want to talk to them. They want to ask questions of them. Just for an example, one of the natural gas companies, an 80,000 BOE producer, had somebody standing by asking question after question after question. And, the CEO came up to me and he said, this guy is, I don't know, it's bothersome. He's just asking questions about detail of how we make decisions and all that stuff. So I said to him, did you ask him if he's a shareholder? Came back a half an hour later and said he owns more shares than me. The guy had made a fortune in real estate and he just wanted to have two or three investments in the energy sector, one oil, one natural gas, one service. And he had this one. And it just shows you there's so much money out there. And people, have already got their conservative money, where be it in big names and bonds and private equity, whatever. But then they have other pools of capital where they want to keep their hands in for a number of reasons. One, mentally, if you're semi-retired, you want something to do. The markets are fun. The markets are
Yeah, keeps your
interesting.
brain
Keeps your
moving,
brain
right? Yeah,
functioning. So
exercising. Yeah.
they come to these conferences and they want to see the companies. They want to talk to them. So for your listeners when they listen to it, and if you put up all the websites there
Yep, we will.
for it,
Yep.
please come to Calgary. If you can come to Calgary, come. If you can't and you take a subscription, if you have friends and family that can come, you can pass those tickets on to them. So it's a great event, and come by and say hello to me at our booth.
Yeah,
I
yeah.
give a
Well,
speech in the morning. We opened the conference up with somebody from the political area. We had the premier of the province, Danielle Smith, 2 years ago, Brian Jean, our energy minister last year. We're in the process of looking at something, outside of Alberta to come and be a speaker on the political side. And then we go into my session on the macro side of the industry. How do you want to spend your day, depending upon your interest area? And then we break out into the presentation rooms and the booth rooms. And we have 5 slots during the day, so you can pick your names that you're interested in and then spend quite a bit of time at the booths.
awesome. We'll certainly put all those links up for our listeners. I really want to thank you for your time. That was extremely informative for me. I'm not a big energy guy. I'm more on the mining side. But I know we got listeners in the resource sector, and it's obviously a lot of opportunity out there right now. So thank you for your knowledge. I feel totally blessed that you spent this time with me today, and I'll certainly be coming out there to your show.
Wonderful, Arlen. Thank you so much as well for your time, and hopefully look forward to seeing you
Yeah, we will for sure. Yeah,
in
no, well,
Calgary.
that's it for today's episode. You can keep up with Joseph and his work at the below links that we'll put in here. There's too many for me just to say out loud. And if you haven't already, be sure to join the Kinvestor Network by subscribing to our channel, follow us on social media. If you like what we do, talked about, share it with your friends and family because it's all about love. Right on. Joseph, thank you so much.
Take care, Arlen.
Yeah, have a
Bye-bye.
beautiful day. Cheers.